Well, now to really talk about what is happening in the rural demand and the agrarian part of the economy and where demand essentially on the consumer front is coming back. Now I'm joined by Mr. Mayank Shah, presents Parle, and Sunil Duggal. He's foremost represented one of the biggest FMCG, rural-based FMCG companies in India, which is Dabur. Gentlemen, good morning. Thank you both for joining us. Mayank, when we spoke to you last, you said that you were delighted with the demand what suddenly came for the category which you represents, biscuit. Now that time all of us were sitting at home and perhaps were consuming more biscuits and snacking a lot. Now that part of India has opened up, normalization has started. What's happened to the demand, at least in the biscuit category?
We're seeing strong demand coming. We are still seeing strong demand coming in from both urban and rural, but more from rural. And 2-3 reasons for that. One of that being the migration of labor to their native places. Second is they carry, the habit of eating the kind of snacks that they had in urban. So that's another reason why you see, good demand coming in from there. Thirdly, I think relatively rural economy is in better shape compared to urban economy, given that, they are not so much affected as much as urban centers by the pandemic. So these are some of the reasons why we are seeing better demand coming in from rural. Add to it the kind of initiatives taken by government. So right from the Pradhan Mantri Garib Kalyan Yojana, where free grains were given, 5 kg wheat or 5 kg rice per person, which was given, and even the added benefit of Manrega, which is the job scheme, or Mahatma Gandhi Rural Employment Yojana. Even there, if you look at in Manrega, there are about 100 days of job which are being assured to a job card holder. And even if you consider roughly about 2 job card holders in a family, we are talking about a 40,000 rupees coming in a family. Plus Pradhan Mantri Garib Kalyan Yojana. So, I think 5 kg grain per person per month and 1 kg of pulses. And that's for 6 months. I'm saying, from April till September, as announced by Honorable Prime Minister yesterday. So all these things put together, are resulting in better demand coming in from rural India compared to urban India. It's not that urban India is not growing, but rural, I think, is growing at least twice as faster pace as urban.
Sunil, some use tractor sales as benchmarking, some use biscuit sales, and some look at management commentary which is coming from FMCG companies like Dabur and HUL to understand which way the rural demand is moving. But based on your experience, what is your sense? Because we've had a good monsoon this year, the MSP prices have been strong, FCI has really lifted a lot of food and grains this year. Do you think we're on the cusp of a big rural comeback?
Are you asking me the question?
Sunil, the question was for you.
For me, okay, sorry. Yes, I think the rural demand has been extraordinarily good. We were off to a soft start in April, but I think rural demand has picked up in May, and in June it has really unfolded big time. And I think this is going to sustain for maybe a quarter or two. The long-term sustainability of this demand, I think, is still a little suspect because the Manrega consumption has already been 50% in the current year of the full year quota. So that means that unless there is a further enhancement of Manrega, the whole stimulus on account of this, which has led to this huge increase in demand, may just peter out. Also, I think the Rabi harvesting has been great. The Kharif sowing has been outstanding. So this will also lead to some uptick in demand, at least for a while. But long term, I think for the consumer space, all consumer staples particularly, it can only be sustained if there's a secular growth across urban and rural. And at this point in time, we're seeing urban growth obviously being at a very low ebb. So urban growth has to pick up, hopefully with the revival in the economy post-lockdown, maybe in the second half of the year, urban demand will pick up. And then we will see a more secular growth. If that doesn't happen, I don't think rural growth is enough by itself to sustain demand over long periods of time. The second issue, I think, when you talk about rural demand, while it is very, very good and very honorable, but also the SKUs which are sold in rural are typically of lower value and lower margins. So if your whole product portfolio shifts radically in favor of rural focused products, you're going to see margin shrinkage, you're going to see pain on some other fronts. Also, the supply chain cost of reaching the rural consumer is obviously higher. So these are the pros and cons. I'm very happy that rural demand has been at least come at the right time, because when the companies were really on the back foot, this has come as a lifeline. But the sustainability of the demand, like I said earlier, it has still to be mapped out.
What has been your experience in terms of the pricing power? One side is demand, but on the other side, we also understand that FMCG companies have discontinued the discounts which they were giving to various dealers. One chota biscuit packet with a bada biscuit packet, that is over now. FMCG companies are no longer increasing reducing the quantity or keeping prices intact. So what we are trying to understand from you, Mayank, is that is pricing power also back with FMCG or branded FMCG players like yours?
As far as pricing power goes, the costs have gone up. So, cost of operations have gone up during pandemic. And as a result of which, typically you would see, promotional intensity going down. That's something that we have seen since last 2 months, because if we look at the cost of operations, right from the freight to, procurement, everything is going up. As a result of that, the margins have, shrunk. And that's one of the reasons why most companies, are low on promotions. Also, the kind of margins that you have to pass on to trade to ensure that, because the cost of operations in trade also go up. So these are some of the reasons why the promotional intensity is lower. And we continue to, believe that this would be lower till the time that, things stabilize, till the cost which was there, cost of operation which was going up as a result of pandemic, comes down. So once the cost of operation comes down, right from freight to, procurement, that's when we'll probably see promotional intensity returning. Secondly, even the labor cost had gone up, because which I would, take it as a part of cost of operation, because not many were ready to come and, work. And there were additional incentives which had to be passed on to labor so as to ensure continued production. These are some of the reasons why, you saw less of promotional intensity. But hopefully, in a month or so from now, I think, things should stabilize. And we would see, in fact, as we speak, some promotions are back. Of course, we are still not in terms of, promotional intensity back to the level of what it was prior to COVID. But going forward in a month's time, we expect, promotions to be back.
What about you, Mr. Duggal? What's your sense of things, when you see things coming back, and also whether you're looking at strategically focusing more on rural markets and segments, particularly for those markets going forward?
See, companies will go where the demand is. And at the moment, the demand is rural. So companies are re-engineering the supply chains, having a far higher reach out to the remote rural areas, and crafting the product portfolio in sync with rural requirements, which means LUPs, etc. But again, I agree with the previous speaker that the promotional intensity, which was very low because of the supply chain disruption and because of the demand being much higher than supply, will slowly now recede, and promotions will come back. And I see promotional intensity coming back big time, if not in this quarter, then definitely in the third. So especially if the urban demand remains compressed and people become more and more dependent upon rural demand. I think another factor which we have to consider is how will the festive season pan out? And I think that's very important, because festive season is so critical to consumption in many, many categories. And I think there was some mention yesterday that the festive season would be a good one. We sincerely hope it is. But if it is not, then I think the revival which we are seeing may just peter out or at least plateau, and we won't get into a V-shaped recovery as all of us hope. So the third quarter is critical. The second quarter normally is a soft one for most consumer companies. I think it will be a decent quarter, but the third is really where it will be make or break.
Okay. Mayank, that's an important point, because now we're starting to hear this. Mr. Duggal's just mentioned this. We heard this in the HUL commentary as well. I want to get your take in, because while we've seen this huge spike in biscuit sales over the last couple of months, and you're saying that it's really both urban and rural, going forward, what are the risks that you see as well to some of this demand growth that we've seen?
Honestly, we don't really see much risk to this growth in demand. And there are two reasons behind that. If you're talking in rural context, rural consumers are extremely value conscious. And given the current context, they are more value conscious. So while they're getting, free grains, free pulses, and, there is also cash transfer that's happening. I mean, there is cash transfer happening to farmers through Krishi Yojana. What they will try to do is whatever cash that they are getting out of either, cash transfer benefits, direct cash transfer benefits, or through Manrega, they will try to stretch every rupee that they are spending and try and get maximum value out of it. In that scheme of things, biscuit fit very well. So we are talking about biscuits which are, about 100 to 200 rupees a kg, majority of them. They offer absolute value in terms of, food item. That kind of value is something that's unbeatable in food category. Not many other categories can offer that kind of value to them. And that's the reason why we don't really see, much risk as far as receding of demand is concerned. So that's on the demand front. Secondly, even if we look at, urban demand, we believe that, given the situation, consumers in urban India would also be value conscious and would typically be consuming, more of biscuits. So going forward, we are not really seeing, yes, it may not, demand may not remain as strong as it was in last 2 months, given the extraordinary situation that it was, but it would definitely be higher than the pre-COVID times. So we are expecting demand to grow going forward and remain at a level higher than that of pre-COVID period.
Just taking a leaf out of the Unilever AGM takeaways, and the management says that they import raw materials and packaging materials worth about 429 crore rupees from China. Having said that, they're saying that they're open to localization via collaboration. How do you think this entire China angle, Mayank, is going to play out, and whether or not Indian FMCG companies can look at local collaborations, and can that model really work successfully?
Well, I feel that, it's the question of, it's just a question of time. If not today, tomorrow, we would have to be self-dependent or Atmanirbhar, as our PM says. How long can you depend or continue depending on other countries, for key raw materials? So if not today, tomorrow, today, you are still in a position to import quite a few things. Tomorrow, you may not be able to. So in a situation like that, you have to be ready. You cannot continue relying on imports for key raw materials. So if not today, tomorrow, you would have to move towards, probably sourcing it locally or, facilitating production of, key raw materials or packing material here in India. So it's question of time before we, start. So rather than waiting for it, ideally, it's better to start it, now. So that's one thing. Secondly, as far as, biscuits are concerned, I would say, more than 98% of our input, be it raw material or packing material, is localized. So as far as Parle is concerned, we don't see that to be any kind of risk, going forward. And as I said, maybe, few materials which you may be importing either from China or from any other country. I think it's the question of time before, you start looking out for local sources, or you facilitate or you develop local sources from where you can procure. I don't think, it would be wise to remain dependent on imports coming in from foreign countries, especially, neighboring countries who are hostile.
Fair point. Okay, gentlemen, both of you, thank you so much. Mayank as well as Sunil for taking time out and helping us understand where the Indian FMCG sector actually stands at this juncture and whether or not the rural recovery can really aid demand for these companies. Good to speak with both of you.